So traders, in today's video, what I want to help you through with is a few different things. The first thing I want to help you with is understanding whenever you get some sort of a channel. So see this is actually gold right now. So this is what's called what I like to call a channel projected target. And you can actually see that if I bring this weekly chart up here, you can see how we've actually identified a really nice channel here in gold. Well, whenever you identify a channel in any market, I'm going to share with you how you can use that channel and use what I call a projected target off that channel. So when it does break out, you can actually start to utilize that. Also, what I want to help you through with today, in today's training session, is I've actually gone through the last big crashes here, right? So this is the 1929 crash through here, 62, 66, the 1987 crash, even the 2008 crash. We've got the COVID crash. Some of these really big major crashes through here. And I want to share with you the one type of a pattern that we can look for on the chart that tell us that we might be starting or might be getting into a bear market, or we could be starting to see potentially a bit of a rollover into a bear market and a crash. And then on top of this, because it is New Year's Eve today, I want to really over deliver and help you guys out. And what else I want to share with you is I want to talk to you about this. Here is a PowerPoint here, and there is a type of a pattern that appears in the markets that, as you can see, right, that when it appears, you got these, when you get these things appearing, you can actually see how whenever we get this pattern appear, we end up getting really big moves. Big move here, and then also a big move here. So there's a type of a pattern here that I want to share with you. And so let's get straight into it, guys. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, traders, so let's get straight into the gold market from here. And before I do start, guys, I really want to say that if you've had a really tough year this year, right? You're confused about the markets, you're not sure what to do, and maybe you've lost a lot of money, then I feel for you, because I felt the same way, right? Back when I first started trading, I was hundreds of thousands, like over $200,000 in debt, because of being involved with these markets. And that was my first 5 years of trading. I've been trading now for almost 20 years. And there was a set of blueprints, a set of steps that my mentor gave me that helped me actually get out of that, to actually start to actually not only pay the debt back, but become a really successful trader. And on that webinar, guys, that first thing in the description there, I walk you through the 3 secrets. Secret number 1 is all about what I had to do to get out of that mess, so I actually could start to make money in the markets there. So make sure you join for me. Make sure you join my next webinar. That first link in the description. I'll share with you the exact blueprint that I had to do to get myself out of that mess. If you are there right now. So with the whole gold market from here, we can actually see that that gold right now is at a bit of a channel here, right? We have 1, 2, 3, 4 times, and now we're starting to a lot of volatility with gold right now. So I know a lot of people are getting chewed up with gold right now. And then also we have this bottom through here. So I like to call this the channel projected target, okay? The channel projected target. Now, what does that mean? That simply means that whenever we see a pattern that looks like this here on gold, or on any market really, whenever we start to get like a bit of a channel, then what we do is we draw a trend line from the high of the channel. Okay, and then what we do is we draw the trend line. Then what we do is we then draw it from down here to the bottom of the channel, and then we project that up. That's what's called a channel projected target, because you got the channel and then the projected target. If I just clone this now, like that, is up here. And now that's actually the target there. One thing you'll notice is that a lot of the times that's actually the minimum target, and a lot of the times that these moves can actually go a lot faster and a lot more. So that's actually what I call the minimum projected target of where I believe gold is likely to go to once it really starts to get, on a headway to the upside. Make sense? So this is really, I love seeing this sort of stuff, right, guys? Because it's like, wow, how amazing is this? That when we start to identify these types of things in markets, and notice what I'm doing here, traders, right? What I'm doing here is I'm just looking at the market itself, right? The charts, and then I'm utilizing that to see, okay, where's this likely to go to? How do I have some probability? The hardest thing to do, traders, is probably looking at, whenever you're looking at stochastics or MACDs or these other indicators, right? You get so confused. I don't know about you, but I used to use a lot of indicators. I used to use the stochastics and MACDs, and I used to do Bollinger Bands, and I don't know about you, but have you been using that for the whole year? If so, how's your trading going? You probably get confused, right? It's like the market's going up, but it's like you get so confused. That's the reason why, if you know about my trading just involves this, which is a couple of different time frames, but I'm just utilizing really just one moving average on the chart to help me make a decision. And with that, you can get a very, very, very high win-loss ratio in your own trading. So that's actually what's called the channel projected target. Now, as I said before, that's probably the minimum I see. Once gold really starts to move up, then we could possibly start to see really move up. I actually see gold eventually getting to the 3,000 mark. Or actually, I actually see gold eventually getting to probably 10 or 20,000 over the next 10 years, that is, right? But first, we're going to go through a boom and bust cycle with gold. Because what happens with gold is gold tends to go for a big move up. And then when we go through the recession, we have a big move down from here. And we know we may be even heading towards that next year as well too. So actually, I don't believe the stock market's going to go through a crash next year. So it may be generally through election years. Generally through election years, what you tend to get is this sort of action, right? So you tend to get this is on the stock market anyway. You tend to get sort of a flattening out period for the whole year. You get a bit of a move up, and then you have a big move like that through there. So this is generally what happens through election years. And so that's probably what's likely to happen next year when it comes to that. We may not get a big crash next year, but again, anything's possible there, right? So, and that's the reason why we need to keep reading what the market is telling us from there. So that's actually what I'm seeing through there, traders. Now, let me bring up the thing here when it comes to this PowerPoint here that I've actually created. And whenever I'm trading the markets, traders, I really want you guys probably know the 80-20 rule, right? The 80-20 rule. That means like really 20% of the things out there, 20% of the stuff that's actually out there really make the needle move, right? The biggest difference. And unfortunately for me, I've had to go through the hard lessons over the last 20 years, trade the markets. But then once you start to really understand some simple, powerful techniques, right? There's a handful of techniques out there that I teach here, and a handful of different patterns that really can put the odds on your side of doing really well. And the whole thing about one of the biggest things I say is simple trend analysis. Now, hear me out. The market, one of the hardest things that I think a lot of people find is that when they're going through these different when they're going through different crash periods, they think the crash just comes out of nowhere. Oh my goodness, the market came out of nowhere, a big crash, right? That's what the public actually thinks. But I really want to give you the educated eye on a professional trader of why that when the market does crash, or when the market does crash, even for us over the next couple of years, you'll be way ahead of saying, okay, now if the market is going to crash, we're starting to get those warning signs, right? Now it doesn't mean it's definitely going to crash, but we are starting to get the warning signs. And that's the reason why I've gone through all the biggest crashes we've seen. And there are some really big major things through here. Now, let me share this with you here. And the reason why I'm doing this is because, the reason why I'm doing this is because I think a lot of people are really worried about the next crash, or they're trying to FOMO into the markets right now, and they're trying to get in right now so I want to get in now before the crash starts, right? And I really want to share this with you to give you a bit of education around that. That the market starts to give us a warning sign first that we may be going through a down period, and try not to FOMO, like I better get in now before the market has a big crash because the market's going to crash. Oh my goodness, I better get in now, right? And that's how you lose a lot of money. Now, traders, that's secret number 2 in that webinar that I'm running, that first link in the description. I teach you my number 1 trading pattern, and I also show you how to capitalize when the market does start to really roll over on the downside. What are the type of patterns you should be looking for, or what I call my number 1 cornerstone A+ pattern, that when it appears, it has a chance of having really big moves. And I share all those details with you on that webinar again, guys. That first thing in the description there. I teach you exactly what to look for. So if you're worried about the market crash, but you want to know how to identify really good opportunities, what does the actual pattern, the rules, the setups, the guidelines, the entries, and so on and so forth, what does it actually look like on the chart? So you can actually know from your eye, oh, this is what it looks like. And that's that first link in the description there, guys. I really want to help you out here. But the reason why I've just come off the back of what I've just said there, because I really want you to not be trading in a fearful state. No FOMO, no fear. Okay, we all know whenever we make it, like even for myself, whenever I make a decision based on fear, it's never a good idea, right? We always do. So what's the best thing around fear? Education, right? Just to educate yourself. And that's the whole thing about the education process, is just to educate yourself so you understand what you're looking at. And the reason why I'm building this up here is because if we look at a trend, what is a trend? Let's look at an upward trend. An upward trend consists of what? Higher lows. Now, as long as we keep making higher lows, the trend is up. Okay? So some of you are saying, no, John, tell me something new. Okay, so what happens if we're making higher lows, then what happens if the market then starts to roll over here and we actually break this low through here? For an upward trend to be in place, we need to be making higher lows, right? Because that means the buyers are really stair-stepping this price up. The big boys, right? Remember, that's what the chart is. The chart is the big boys telling you and giving you, the big boys are really giving you a footprint about what's going on in the markets right now. Makes sense? And that's what really the chart really is, right? It really gives you a footprint in the markets, right? There was a beautiful trade that happened on the Nasdaq just a couple of days ago on the futures markets on the open. And again, it was just and it's a beautiful, beautiful, beautiful setup. I won't go through that right now because I'm trying to get into the crash period through here because I think a lot of people are worried about the next crash happening. But just so you know, guys, when you really start to know what a really good setup looks like, oh my goodness. So low, higher low, higher low, and higher low. That means the buyers are in control, right? Because the big boys are stair-stepping this up, right? They're pushing it and they're in an upward trend. But if we start to break a lower low, if we actually break a low, that means that we're no longer in an upward trend right now. And if a bearish trend is going to start, it could be here. It doesn't mean it's definitely going to, but it could be here. This would be the point here that you'd be saying, okay, we're no longer in an upward trend right now. So if I'm long this market right now, I'm actually guessing and gambling. And then what tends to happen a lot of the times is, again, if this happens, what tends to happen a lot of times is then it'll then come up, create the lower high, and then we'd actually start to see a really big move down. Again, all based off just the chart itself. So if you are FOMOing in these markets, you feel fearful of the next crash. Oh my goodness, the next crash. And that's what I'm saying. Like right now, no, there is no sign of a crash happening right now. It doesn't matter what anyone else says in the markets. No sign of a crash. Not yet. No crash, not yet. But it's coming. And so, but what do we look for? And so, as you can see through here, as that's what happens. And a lot of the times, the market will break a lower low. So it'll actually break a lower low first, then it'll make a lower high, and it'll break past these previous lows. Lower low, lower high. What is a downward trend? A downward trend is what? Lower highs, lower lows. Lower highs, lower lows. And the reason why I'm bringing this up here is because look at the 1929 crash. Low, and again, I had to go back all the way back to 1929 for this chart, right? Low, higher low. What is this here? That is what? That's a lower low. That means what? The buyers are no longer raising their prices. And if you're still unsure about that, then we have a lower high and then we break it. So at this point in time through here, when this happens, who's now in control of this market? Is it the buyers or is it the sellers? It's the sellers. And then we have the big crash through here. People are jumping themselves out of the building. Oh my goodness, I lost so much money. And it really does come back down to, remember I said before, the 80-20 rule. There's a lot of people spending a lot of the time on the 80%. Like, what's the stochastic say or the MACD say? It's like, it's not the be all and end all, right? Becoming a master of the chart itself. And if you've watched my videos over the last couple of days, you know that that's my forte, right? It's about reading the momentum in the markets, gauging the markets from the actual chart itself. There's so much power in that. And so we can see here, look at this here, lower low. And then we had the big crash, right? Let's go look at the 1962. What happened in the 1962? Oh, we had a higher low, higher low. Look at this here. It broke a slight lower low, then ran up to make what? A lower high. And then we broke the low. So as soon as we actually broke this low through here, who's in control? Oh, the sellers. So we're no longer in an upward trend. Remember, we don't make these patterns in the markets. The big boys do. And as the big boys are buying and selling, they create these patterns, and that's how we can see what's going on, because it's based off what's going on in the markets right now. So if you're really, really, really worried about the market crash, oh my goodness, I better get in now. No, if it's all that probability, right? So we want to be able to gauge this. And remember, traders, we need to see at least a low broken. If the market's making higher lows, and we're doing that, we're not even nowhere near a top yet, right? And especially right now in the indices, no. We're in a massive bull market right now, and there's not even a sign of it being a crash. So don't even think about it, right? And it doesn't. And the hardest thing about the individual trader is they try to say, but the economy is doing bad. How can the stock market? Forget that, right? Don't try to put them together, because guess what ends up happening? You're better off just running into a brick wall, because you might make a bit more sense of that, right? Oh, the brick wall hurts. You actually make sense of that. You try to make sense of the economy and the stock market together, that doesn't make sense, right? So again, actually don't run into a brick wall, by the way, right? But remember I said before, is that if we start to break this low through here, then that's now the warning sign that the big boys are no longer pushing this market up in an upward trend. Look at this here, 1966 crash. Low, higher low, lower high, and then look at this here, down, up, down, big crash, right? 1987, what happened here? 1987 crash, right? We all know the big 1987 crash. Low, higher low. We had this sort of higher low, same low, didn't actually break it, right? Didn't actually break the low. Then we ran back up, came this higher low. Look at this, what is this here? A lower high. And then, but remember I said before, it's not about so we actually didn't break the low. In this case, what did we get? We got a higher low, and then we got a higher low, but then something we started to roll over, and then we got the lower high. This time we got the lower high, and we break the low. Down, we still got the higher low, but then the sellers started to come back in and through here. So at this point right now, we've got a lower high breaking the low. And then we see the Black Friday come and the big crash and so on and so forth. Interesting, right? Interesting. And this is where traders again, the 80-20 rule. And that's what I'm all about. Me as your coach, guys, I'm all about teaching you the 20% that really moves the needle, right? And just try to simplify the process for you, because at the end of the day, we just want to try to keep it simple, and we also want to do really well at the markets. The unfortunate thing is that when we actually have a lot of stuff on our plate, which means that all the different indicators and all sort of stuff, we're trying to make a decision, and we get so confused that we're actually missing probably one of the most important parts to our dish, right? It's no sense going out to dinner and having a whole bunch of veggies and there's no steak there. Where's the steak? The steak is what? The trend analysis here. 2008 crash. What happened through here? Higher low. Then it broke probably maybe a slight lower low, then a lower high, down, lower high. See what I'm saying? This has actually started to roll over here. It's not like the start of the market then suddenly just crashed. Oh my goodness, 2008 stock market crash. Remember guys, this is 2008. That's 365 days. So we don't need to be trading in fear. Trading in fear is never a good idea. What's the best thing to do? Is try to trade based off these techniques and education about what I'm teaching here. This is the reason why, guys, again, that first link in the description, secret number 2 on that webinar is all about my trading system. I teach you, and you'll be able to see the reason why rule number 1 in my trading system is the trend analysis. And then I start to apply some moving averages, and I start to apply really good entry candles, the proper entry candle to get into, and so on and so forth. Again, I'll teach you all that through here. That's not the purpose of here, but the purpose of bringing that up is because I want to share with you that that's the reason why it's my number 1 in my trading system is this one here. The COVID crash. Low, higher low, higher low, higher low, higher low. Look what happened. We broke this low through here, and then the big crash happens. Remember I said before that as if we actually, this is the last higher low, and as soon as we started to get through here, the buyers are no longer raising their prices, or we're no longer we're no longer in an upward trend. Remember, the big boys are talking to us, and as long as the market still makes these higher lows and higher lows and higher lows and higher lows, oh look, upward trend, oh broke a low. We're no longer making higher lows. What does that mean? Possible now change in trend. So this here would have been right here would have been your warning sign to say, okay, something's not right here. We were making higher lows, And then suddenly what happened? We got the big move down. Now, we can never predict this big move down, but when we do start to get this type of action through here, this type of lower low, lower high type of action, it was like, then if something's going to happen in the market, it's going to be here because of this here. Now, again, guys, I don't believe we're going to see a COVID crash like this. Remember, that was this here, this COVID is anomaly. Anomaly? Right? This here is what? It's a once in 100-year event. It's not the normal, right? You'll see through all the normal crashes, we start to get this sort of action, even in the Bitcoin crash. What happened in the Bitcoin crash? Again, this works on every market trade. And so again, trades, this is where, like, for my trading system, I trade every market out there. And my very first rule is rule number one is trend. Look at this here. Higher low, higher low. So right now, who's in control? The buyers, right? Because we're in an upward trend. Then look what happened. Then we actually came down and what? And then we broke this lower low through here. This lower low. So at this point in time, like, okay, this is different now. Why is it? We're making beautiful high lows, right? Beautiful, beautiful, beautiful high lows. Hang on a minute. Now that's not right. And then look what happened. Then we ran up and then we went through this here. And then, as you know, then we actually went down like that through there, right? We went through the Bitcoin crash, as you know. Oh my goodness, Bitcoin crash. Hang on a minute. Remember, it's not about one tweet or one thing like that. Look what the chart is telling us. And this is where the power in the charts, Now, this is for trading opportunities, guys. If you're more like long-term investing, then I think it's important to apply some really long-term cycle analysis. I'm not going to get too much into that in this level here, but I believe if you're looking for long-term investing, the best thing to do is just look at cycles through the last 100 years. Look at the boom and bust cycles. Look at the markets. What I believe is like the mining sector, right? Where the mining sector hasn't done. Last mining boom we had, again, investing, we're going to buy and hold for 10 years, not buy and worry about it for the next 2 days. If you look at things like the mining sector, right? When you're applying an investing point of view, and what I'm talking about here right now, guys, on the charts, this is trading, right? Because I'm looking for trading opportunities to make an income throughout the year. But investing is where you start to apply some really simple cycle analysis. Like, again, with the mining sector, we haven't had a mining boom in 10 years. So what's probably going to happen in the next 10 years? So just some common sense around that investing point of view. Does that make sense? So I really wanted to share that with you there, guys, to make sure you understand it. And you'll be able to see now why, again, that first thing in the description there, guys, go register for my webinar today. And again, my secret number one is about the blueprint of me getting out of that $250,000 in debt, what I had to start doing to get out of that debt and start to make money. And then secret number two on that webinar, I'm going to teach you exactly my number one trading pattern. And you'll be able to see why that is rule number one for me is trend analysis. This trend here is rule number one. Then I have a couple more rules to make sure I'm getting in at I've got the proper pattern, the proper setup, proper entry candle, so on and so forth. And I'll teach you all that on the webinar. That's not what this whole session is all about. Now, let's actually go. Are you enjoying this? Are you liking this? Please give me a thumbs up and a subscribe and all that sort of stuff. And give me a hell yeah, Happy New Year. Let's kick some ass in 2024 in the comment section below. If you're enjoying this sort of stuff here. Again, guys, I really want to help you. And what I'm talking about here, let me actually bring this slide up through here now. What I'm talking about here, traders, is just some really simple things that I've learned. And this is where, like, for me as your coach, right, I spent the last 20 years really analyzing, studying this stuff so I can what's taking me 20 years to really figure out, understand, come to grips with. And I'm trying to literally deliver to you in a 30-minute video. So here's some bit of a shortcut through here. So I really want to walk you through this pattern through here. Now, one of the best patterns that I like to use is what's called the L-shaped pattern. All right, I'm not going to qualify it too much. Again, on that webinar below, guys, you'll be able to see how I qualify the L-shaped pattern. But I always like to trade the patterns that look like an L shape, where it means, in this case, it's bullish scenarios here. And if we're looking at these as bullish scenarios, all you have to do is flip it upside down, right? So this is, let's actually do this here. Let's see if I can do this. So these are all bullish scenarios, right? And all you have to do is, what does it actually look like for the bearish? Is you'll see this is what it looks like for the bearish scenarios. Right, so it's basically the exact same thing but flipped upside down. Oh, by the way, traders, if you guys were trading the futures markets on the market open, this setup right here is exactly what the Nasdaq did, and that's exactly what the Nasdaq did. So repetitive patterns repeat all the time. And by the way, traders, what we're seeing through here, these different patterns here, and again, it may look, this is basically the exact same thing, but repeated on, these are all different types of markets through there. So anyway, I want to share this pattern with you because I think it's really, really important. Now, the foundations to this is what? The foundations to this link through here. And I really walk you through in that free trading course, second link in the description, guys. I really walk you through a lot of the chart reading techniques in the phase number 2, in phase number 2 and 3 in that free trading course when it comes to chart reading stuff. Second link in the description there, guys. So, but the thing is that I'm always looking for the L-shaped pattern for starters. So I'm always looking for the market, or it's called see how that's an L-shaped pattern? Well, for me personally, I'm always looking for the upside down L-shaped pattern. So when the market goes up, I'm really looking for a good sideways period through here. I'm looking for a strong move up and a slow move sideways. That's sort of like the basis of what I'm looking for. Again, I'm not going to get into the rules exactly, but if we can get this type of setup here, and also it's coming off the back of a huge resistance level coming through here, there's a big probability we're going to go for a really big move. And this is where like education is so important, traders. So important that you know what you're looking for in the market. So when it appears in the charts, you can start to do really, really well, right? And so that's where like education is like, how do I actually identify these patterns? So when I'm trading throughout the year, when I'm trading throughout 2024, how do I identify these patterns in real time? So therefore, I'm not missing out on these amazing opportunities, right? And that's obviously, it's a really, really, really big thing there. Now, as I said before, what I'm looking for is I'm looking for the up and the down and then another move up. But I'm looking for this pattern, this L-shaped pattern, to be at a level of resistance where the market had done something like that, right? So what is it? Sideways, resistance, breaks up. A lot of the times it actually comes back down to test this resistance, that all these resistance levels through here as support. It still gives me what? It still gives me this up and this slow move down, like a slight little L-shaped pattern, and then we get the big breakaway. Okay, so let me go through, and I'll show you through these examples here. These are actually trades that I've taken this year. And once again, traders, that's where like education is so important, right? Education and having a coach there who actually does this every day is so important from there. And this is the reason why, guys, in that webinar below, first link, on secret number 3 in that webinar, I talked to you about how I use scans to scan thousands and thousands of stocks every day to help me try to identify these patterns. So as they appear throughout the year, which they don't appear a lot, but as they do appear throughout the year, I can take advantage of them, because when you start to apply this with the stock market, and you can start to apply some leverage like a margin or like a thing like options and stuff like that, oh my goodness, we're talking hundreds and hundreds and 100% return from there. It's amazing. And that's the reason why, guys, on that webinar, the first thing in the description there, that's the reason why I walk you through the secret number 1 is all about, okay, what do I have to do to actually get out of that mess of being in debt? Secret number 2 is all about, what does an actual powerful setup look like? And then secret number 3 is about, okay, these are powerful setups, but how do I actually find them? And then we use the scans to find them. It's so incredible. And that's the reason why I'm doing that, I'm running that webinar today to get you started for 2024. So what do we have through here? Right? Let's actually look at this here. So we have this resistance level all through here. Resistance, look at this here. Up. See the L-shaped pattern there? Out of that resistance, look at that big move up. Big move up. Look at this here. Resistance. See what do we have here? Up. See the L-shaped pattern and the upper? At what? At that resistance level. What do we have here? Up. See that little L-shaped pattern, and then we had this breakaway bar there. Where was that? At a major resistance level, right? And now we're not talking about like a little bit of resistance, right? We're talking like a big resistance. And look what happened here. Up, sideways, breakout. This here was a trade actually on the DAX, and I remember this trade. This here was a 5-minute chart, and I used and a bit more advanced here. Oh, by the way, guys, look at that. Look at that. All that resistance. Look at all that resistance through there. Resistance. Look at all that resistance. All that resistance through there, and guess what? Then we have the L-shaped pattern, a breakaway bar. And again, traders, I teach you this pattern here on that training below. And you can see through here, and now put this way, traders, like this one here was a 5-minute chart. And because I saw this coming, I used like a 1 or 2 minute chart, and I got in just here, just as it was taking off. And then we had a really big move up. That doesn't look like much, but it was I remember this here was a DAX trade, and it was beautiful. But traders, these trades here come around, right? But as I was saying before, that if I actually bring this chart up through here and I zoom in, this one right here, this happened, these trades do come around, but the power is understanding this. Because traders, if you start to, like, if you saw this on the stock market, if the market's going to crash and we saw this on the stock market, and you did a $5,000 option trade, some of these trades, when the COVID crash was happening, guys, I was generating 500 to 1,000% return in some cases when the market was crashing because of the COVID crash. How are you setting yourself up to benefit from these as well too? Because when they do come around, well, a $5,000 investment for you could generate $50,000 or $25,000. A $10,000 trade, by the way, guys, when I say $10,000 trade, if you're using options, $10,000 trade, you're probably risking maybe $3,000, maybe $4,000 out of that, right? That's what the risk is generally through that there. But if it does move, that $10,000 position could be a $50,000 to $100,000 profit, right? And that's what it's all about. It's like, I really want you to help you understand that when it comes down to you getting coaching and you getting educated about understanding these patterns, is that how much money are you losing out from not even understanding how to identify these patterns? Because you could actually see this pattern right in front of your face, but because your eye is not educated how to identify this, guess what ends up happening? You actually miss out on these amazing opportunities. And again, these opportunities don't come around all the time. You do have to be patient for them. That's a big thing here. They don't come around every day, sometimes not even every week. They're not an every week occurrence. But as throughout the year goes, if you got like a handful of these trades, you too, from trading from a $5,000 or $10,000 investment, you too could potentially be a $500,000 or $1 million profitable trader just from taking 10 or 20 amazing quality trades throughout the year. And some of them may be like this. Now, again, I know this sounds pretty crazy, but this pattern through here was very, very, very similar to what the Nasdaq did on the futures markets. You know what? Actually, you know what? Let me do this here. I'm going to show you what the actual chart looked like. Let's actually go to this here. I've got a lot of PowerPoints going on here. Are you guys enjoying this? Give me 2024 rocks, or I'm going to rock 2024 in the comment section below if you're enjoying this. Again, guys, I'm doing this right now because I really, really want to help you. And I want to show you guys as well too that my 20 years has mainly been focused on the markets, right? The charts itself. Like, how do I identify the charts and what's the charts all about? And how do I identify this and how do I make sense of this and how do I really get ahead of the markets? I'm trying to give you guys the 20%, right? The 80% is going to confuse the hell out of you. So, remember I said before, pattern, right? Look at this here. Now, a very, very, very similar thing that happened on the Nasdaq. And I'll share this with you right now. And that's what I'm saying. Like this trade here, beautiful, right? Beautiful, beautiful, beautiful. Look at the Nasdaq. Let's go look at the Nasdaq here. Nasdaq. What's going on with the Nasdaq? Right. So, you guys are not going to believe this, are you? Now, remember I said before, guys? What did I say before? Right? What did I say before? I said what? When we have an area of resistance for a while, and we get the L-shaped pattern and we get a bit of a down bar, we're probably going to go for a big move, right? Okay, cool. So this is the 15-minute chart. Let me actually bring up also a 5-minute chart for you because I really want to, I'm telling you traders, look at this, right? Look at this. What do we have here? What is this? What is all of that through there? Oh, John, that's a support, right? So remember I said before, there's two different levels, right? The first level is that we have a lot of resistance and then it comes back up and comes back down and then we get going again. Like that there is powerful. On the bearish side, what are we looking for? The flipped upside down. We're just looking for what? Support, broken down, come back up, slowly come back up, large bar, and then we start a big move, right? See how it's pretty much the same thing flipped upside down. See how that is basically that through there, right? Look at this through here. What do we have? Support. It broke a lower low and we slowly came back up, which created the L-shaped pattern. We had a large bar breakdown and we had a move. This is exactly what happened on the Nasdaq, guys. Like, this is not some theory. This is actually what happened on the Nasdaq. Look at this here. What do we have? All through here. What do we have? Oh, look. Support, 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 support. All the support, all the support. Look what happened. See the L-shaped pattern? Down, up. We had this large bar coming down through there. And look at the move after that happened. Look at that. Now, guys, you're talking about futures markets here, right? You're talking about a future market. And I know when you're trading the futures markets, right? I'm telling you right now, traders, a $10,000 investment through here, a $10,000 investment would have made you roughly around $20,000. I think it was around $20,000 to $25,000 from a $10,000 investment, right? That's the margin through there. And that's what I'm talking about here, guys. How many trades do you need like this per year to become a six-figure trader? You see what I'm saying there, traders, right? It's all about the education. It's all about the education of understanding how to identify these markets through here. So anyway, traders, I hope you enjoyed this video. Please leave a comment in the comment section below. Subscribe, hit the like button, all that sort of stuff as well too, please. And let me know what is sort of the one thing you really got out of this massive training session I got for you. And again, I'm doing this because I really want 2024 to be an amazing year for you. And once again, traders, if you really want to wrap this up into 3 simple sort of secrets of what I've gone through with my debt, the trading system, how to find the trades and so on and so forth, then make sure you join me on my next webinar, that first thing in the description there, guys. And once again, traders, please leave a comment below and let me know the number one thing you really liked about this training.